The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour. I've got a little bit of a echo. I'm not exactly sure why. Did I turn everything off? I think I did. Anyway, what we have is a market that in the S&P's up 23, Dow's up 274, Nasdaq's up 81. Volume's good, but not enough to really get the 15 or 16 billion shares that we probably need to blow through 4,000. Maybe it chews through. I think there's a few things going on. We had some news out there that suggests more gridlock in Washington, D.C., and there's few things that are more like catnip to Wall Street than both the Democrats and Republicans going after each other's throats rather than ours or Wall Street's. So that's probably a small positive, although I don't know how much more gridlock we could expect. But certainly it's a little bit. The thing is that a lot of these moves, as we talked over the last week, I said we were looking for something from 4,000 to 4,100. I would have liked to seen a little bit more effort to set a good base to get to 4,100 than we had. Now, of course, nobody really knew that China was going to really double down on reopening and canceling the lockdowns. So we've got a little bit of good faith in that. But very interesting market nonetheless. If we go to look at, let's go ahead and pull that up, for some of the big movers, LOGI. One of the darlings of the lockdowns, of course, was Logitech. They had a fairly nice move off $41.81 up to $68.17 yesterday, down, what is that? About 17% or so, all the way back down. And you're going to have to watch for these. Many stocks have come back to levels where they're going to fall into heavy resistance levels. If they don't do well, or if they do poorly, there will be hell to pay on some of these. Yes, I know that joke. CTSH is the other one I wanted to look at. Get that up here. Okay. Nice pop in this one. You do have some fairly decent volume. You gap down on Cognizant with 3.8 million shares on September 13th. You, again, want to see more volume than that 3.8. You've got it pretty good today. 7.6 million shares, which is about 100% more than that. You gave a lot up from the 67.41 high, but, can this thing go sideways and then start moving up higher? I would take a look at it. We do have Tim Ord coming along here, so I'm going to try to get to as many questions as I can. Okay. What is my insight on? I have no idea what you're asking. Okay. There's no thing, just something designed for the future. Okay. Don't know what we're talking about. Okay. Maybe this is some kind of spam. We'll go here. What do we got? About 4 minutes left. Anyway, that's part of it. In the newsletter news, we bought TSM back, I think it's below 74, around 74 bucks in this last move about 7, 8, 9 trading days ago, and sold out today. I like all of this, but generally any kind of huge gap higher like this is always a time to think about selling when you can, not when you have to. Didn't get quite the highs, but certainly got a at least probably somewhere between $11 and $13, depending on when people sold out today on TSM. But that kind of looks to me like the easy part's over. Now you're fighting for the last few bucks. If the market turns on you, well, that's kind of tough. 877-927-6648. We've got Tim Ord on today, and he'll be in just a few minutes at the top of the next segment. If you have any questions or want to call in, do so, or email me. We've got a couple of questions already set up for him today, so we'll be going through those charts. If you want the charts and you want them to go through as he speaks or later today, just email me at path@TFNN, and I'll make sure and get those charts to you. Anyway, kind of trying to tap on the door of 4,000 on the S&P. A lot of people probably surprised. I think I said it during the update, but I had a lot of people telling me that the market was going lower, and generally these people are almost always wrong. There was no way that I was going to short this market going into this morning, although there is the opportunity for some significant downside. 21 points is not the end-all, be-all for a higher market. But again, markets generally turn when the shorts, in bear markets anyway, turn when the bears give up. And I'm still waiting for a sign of that. Let's see. I'll try to look at that during the break. I don't know if I've actually got that. First question about SLB. See if we've got anything here. SLB, draw options. Okay. So a big question on options. Significantly lower on Schlumberger. Let's take a look here. Get the latest quote. Okay, 58.33. You are on the absolute extreme end of this. Support's probably at 55. If it hit $60, I would be short Schlumberger. Doesn't mean that this is going to run back down to $43, but you probably are massively priced. Everything's priced in at $58.35. Did we get any higher here today? 58.33 is the high. Okay. Maybe you get another buck to the upside. At $60, I would start betting on the downside. We'll be back. Go with Tim Ord in a minute.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors. Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
And we're back. It's a brand new year, and we haven't heard from Tim Ord yet. Tim Ord has a newsletter for over 30 years, won many awards as Timer of the Year Digest for many different, what would you call it, segments of the market, from gold and the S&P to others. One day he'll have to regale us with all the different ones. But pretty long track record. He does, and a little bit different than what I do. I'm a fairly active trader. He tends to be more on the long-term side. I want to thank Tim Ord for being on with us yet again.
All right. Thanks for the introduction. So should we dive right into it?
No reason not to get into the deep end of the pool right away as soon as I find the thing I want to click on, which we have. I've got the CBOE options equity put call ratio up and in front.
Right. All right. This chart goes back to 2016, somewhere in there. And anyhow, I didn't draw the line right, but use the intermediate term lows. What put call ratio do is it helps kind of find the mood of the market. If you got a lot of puts going on, then you got investors kind of leaning bearish, and we got a lot of calls buying compared to puts, then the investors are kind of leaning bullish. And you kind of, this is a real good sentiment indicator, and kind of gives you a good picture for the, in my opinion, kind of intermediate term. Anyhow, that line's not drawn there, but the bottom window is the equity put call ratio for a 21-day average, and anything above usually 0.7 is usually bullish. And the next window up is the 10-day average, and anything above 0.8 is bullish. I got kind of outlined that the March low was at that time kind of historical ratio. On the 21-day, it was around, looks like about 0.8 on the 21-day, and the 10-day was about 0.9. And that's unusually high, and that led for a spike bottom, and the market rallied over the next, actually, couple of years. And I listed some minor ones going back, but the last big ratio was back at the March 2020 low. Well, on this low we had here, first part of January, the 21-day reached 1, and the 10-day average reached 1.2, which is extremely. I mean, everybody was leaning on puts going into that mild, or actually that pullback we had into that January low. So that was kind of a flashing sign that sentiment was way bullish. And previous times with about half those readings, the market was making intermediate term lows. Those blue lines going across the chart on the SPX there shows the times when those two ratios reached bullish readings in the past. And all of them came at least some sort of at least short-term low, and most of them come at intermediate-term lows. So we think there's an important low probably being made in here. If you're a fundamentalist, you have no reason really to be bullish. You got, inflation going on, you got interest rates going up, and all sorts of negative stuff. But we've gone down, last year close to 20%. And maybe now the market's looking forward, because the market always does look forward, not at current what's going on, but looks forward over the next 6 months to a year what may be going on. So according to this chart, this is actually an intermediate term bullish sentiment indicator. So have we made a major low? Well, I don't know for sure yet, but the sentiment indicator gives promise, I guess, that everybody kind of bailed on the rally here, and they're looking for the market to go much lower in the coming months. So I don't know. That's a good sentiment indicator I used in the past, and it seems to work pretty well. We can move on to that one chart. I know you emailed me today that you wanted to talk about the McCullough Oscillator and Summation Index. We can move on right to that if you want to.
Okay, I've got it up.
All right. The bottom window is this chart goes back to, I don't know, can't really read it. I need my, it looks like about 2008 or whatever that is. Anyhow, the bottom is a McCullough Oscillator. When it gets below minus 400, usually you got a climatic type situation going on. In other words, everybody's hitting the sell button. And those blue lines across the chart show the times when the McCullough Oscillator hit below 400. And all of them, without exception, I think, were at least on a short-term bottoms. And market goes through two things. It has to go through a capitulation, and right after the capitulation, you have to have a sign of strength. And if you get capitulation without a sign of strength, you don't have a bottom. So you got two things that form a bottom. And the more panic you got, the better it is. Because the more panic you're having, you're probably looking at a more longer-term bottom, because big bottoms have more panic, and the smaller bottoms have less panic. So we did have panic going into that low we had in, what was that, the September low, I guess it was, or October low. McCullough Oscillator reached minus 420 on September 26th. That was a low. Then from there, we need a sign of strength off that low. Well, I use kind of the summation index for that. Summation index, when you get a climatic low, you should get at least below minus 700 on the summation index. And I marked the times in the past when that has happened there. But there's two things here. Oscillator works a lot better at bottoms because it climatic's a lot quicker than the summation index does. So I'm trying to point out here that the McCullough Oscillator hit minus 420 on September 26th, and the summation index did get below 700 about that time, but went down to minus over 1,000. I think it was on October 7th. A couple of weeks after the McCullough Oscillator hit minus 420. So that was kind of a lagging here. And now we're looking for a sign of strength. And there's two ways you can get it. You can get the McClellan oscillator above plus 300. As of yesterday, we're plus 272. And for intermediate term, you need the summation index to get a plus to 1,000. And we haven't done that yet. So to get that, the summation index, it needs to be, in other words, this rally or the advanced decline line needs to be positive over the next several weeks, or at least the next several days. It depends how powerful the rally is, to get the summation index to plus 1,000. If we get there, say end of January or 1st of February, then we'll be okay. I hear the noise, so
yep, I emailed you another stock, so you can take a look at that during the break. We've got Tim Ord on, if you'd like to talk to him, 877-927-6648.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
And we're back with Tim Ord of the ord-oracle.com. So we're looking at the summation index. Continue.
All right, I'm probably a little bit not clear here, but in general, you need to get back to the summation index. You need a climatic bottom, and that's a reading below 700. We reached minus 1,000 on October 20 or October 7th, and now we need a rally to plus 1,000 on this current rally, not 2 months from now. But on the current rally, we need to reach plus 1,000. So in general, not saying every day is going to be an update, but you like to have the market rallies continue until at least we get to plus 1,000 on the summation index. And if we do, that's an intermediate term bullish sign. And I marked those times. The blue lines on the chart are when you have the capitulation, and the red lines on the chart are when the summation index did get above a plus 1,000. If you can see, they all led to intermediate term rallies, and so that's what I'm looking for right now. Yesterday, we closed on the summation index, looks like about 188. Today will be higher because today's advanced decline line is eyeballing about 2,000 more, or close to it, 2,000 more advancing issues, and compared to declining issues, and that's going to put probably the McCollum Oscillator above plus 300 today, so that's a sign of strength. But the summation index is still below plus 1,000, so you can have a mild consolidation, maybe 3-4 days, but not for 3-4 weeks. So this rally needs to continue. So I'm hoping for this month out that will reach plus 1,000 on the summation index, and that clears the way probably for a positive year in the market. How big of a positive? Since the market was, I think over the last 50 years, 73% of the time the market finished in positive territory. That's counting all bear markets and all bull markets, 73% of the time. So there's a good chance we possibly get to plus 1,000. There's a good chance we could see a 10% up here. Now, if we don't get to plus 1,000, then all bets are off. We probably, we'll be lucky to break even. So this is an important rally, and this needs to rally to continue now. So,
what do you think about the possibility of us sitting here bouncing between 3,900 and 4,000 on the S&P cash? Does that change anything for you if we just kind of played around in this area for the next 7-8 days?
I mean, what I'm looking at the SPY, so it'd be about 380 to 390, you said?
Yeah.
Well, if we did that, the summation index most likely won't get to plus 1,000. That would be quite a few negative days as far as advanced decline was concerned. Normally, you get a positive advanced decline line when the market's rallying, and a declining advanced decline when the market's declining. So what you're saying is the market flips sideways here. You'll have just as many advanced decline days on up days as you do down days, and that would probably fail to push the summation index higher.
The only reason I bring it up is options, at least today, are kind of pointing to sideways action through the 20th, through the monthly options expiration. So I was just looking. I was kind of surprised that we got up this early, this fast, and I thought it would probably have been better if we would have consolidated a little bit before we took the run at 4,000 on the S&P today. But like you said,
we flipped, from about mid-December to early January. We had about a 2-3 week, a base building period, or building cause, as Wyckoff would say. So, if you got 2 weeks of building cause, normally you get, something more close to 2 weeks of a rally. And we're into 1 week right now, just a little bit better. So I'm thinking we got at least another week of the rally. If you, I don't know if I show you the chart. Yeah, actually, we can flip the chart 3, and I just want to point out something.
Got it up.
You can get it there. All right. Anyhow, this is a weekly chart of the SPYs, and the SPYs, from my experiences, give the best truth of using volume. I've tried SPX; it doesn't seem to work as well. But the ETF for SPX is SPYs. For some reason, volume works really well. The rules I set up for it, anyhow. Let's see, be 1, 2, 3, 4, 5 weeks ago, with a blue arrow on it pointing down, we kind of hit a new high, then we closed down below a previous low, and we tested a previous high of September there, and we tested that high on higher volume. Actually, I should. But anyhow, then the week after that, we tried to break below that previous low, and the volume shrank. And I noted that with a red arrow. And so if Mark can't take out the previous low with volume, they'll try to take out the previous high. Well, that previous high is at, looks like about the first week of December high. And it may go back up there, and I think that's where we're going to head. So on a weekly time frame, that's what normally happens. You can't take out the previous low with volume. They'll reverse try to take out the previous high. Well, that previous high comes in at 410. And the Bollinger Bands are up there, too, so that 410 may be a pretty good resistance area. But if you also look at the retracement, if you take the October low up to the November high, the market only retraced 50% of that up move. And if it only traces 50%, that suggests the move is a halfway point of the next move up. If you do that if you do that analysis or calculations, you come up and test the August high, which is up around 430. So I'm thinking we're going to at least hit 410. There's quite a bit of resistance there. It depends how you test that area. If you test that area, the 410 area, on higher volume than that first week of December volume, that implies the market has enough energy to push higher to the next higher high, which is the August high. So we'll have to kind of wait and see. But in my opinion, it looks pretty good. Because if you notice last week's big jump, not huge jump, but a bigger jump in volume, jumped above the previous highs on decent volume. So I'm thinking we're going to go back to the early December highs and test that level before we get a consolidation. So, I think we'll get past 400. I think we'll get to 410. So, but we'll have to wait and see. This week we're heading into a 3-day week. So, a lot of times the market, tops or bottoms around holidays. We'll have to see how big a volume is tomorrow. But there's another statistic, too. If you look at the QQQs, the market was up 5 days in a row, I think, today. And if you're up 5 days in a row, there's, I think, forget the exact statistics, but something like 90% of the time, you'll hit another higher high, and the average next higher high is 1% higher. So that next week probably still be up, even because of the 5-day rule. So.
Okay, when we come back, we'll have Tim look at Netflix as one of the first questions. Phew!
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
As we return, we've got Tim Ord on. I did get your chart for Netflix, and it's up. First question I have are, what are all these little bars on the left-hand side here?
Oh, that's volume by price.
Okay.
I kind of look at it. That's where all the volume came in at the price, like 175 to 200 on Netflix is where the most volume occurred in this time frame shown. So I look at it. Sometimes it has a lot of meaning, sometimes it doesn't, but it kind of messed up the chart a little bit. But I want to point out on Netflix, this is the monthly chart. And if you look on April, I didn't have time to draw all up, but if you look at April, that's the highest volume down. That's the highest volume period on that chart. So if you look at April, for the month of April, then the next month, which would be May, you broke to a new low on lighter volume, then closed above the previous low. Okay, that's generated a buy signal. You had another test in June of 2022, and it came on even lighter volume. So the market tried to go down, couldn't do it on the monthly time frame. Then you had a bullish engulfing pattern on July 1st. That engulfed the last 2 months. So you got like 3 months in a row there of buy signals, different types of buy signals. So anyhow, they were back to that same rule. If the market can't take out the previous low with volume, we'll try to take out the previous high. Well, the previous high is that selling climax month, and the previous high comes in around 395, which is the April high. So I'm thinking that's where we're going to go. As this market's kind of pushing higher, we hit October there, and the volume's really pretty good. Then the next month, you hit a higher high, volume dropped and dropped again. And so I'm thinking it'll probably make it to that 395 on the SPYs, or not the SPYs, but Netflix here. But probably it's going to be at least a sideways pattern because the upside energy is kind of running low here. So I doubt to get through that the April high at 395. I think that's going to be resistance, and how it, if we test that high on volume where it's currently running, it's probably going to have a hard time getting through it. Will it go back down again? Don't know, but I think 395 is an upside target.
Well, what do you think about us hitting the huge gap down from the on the daily from 420, which would be April 20th? You came down on 133 million shares. You're up today on about 11 million shares into that gap.
Okay, yeah,
down.
there's a gap there. Yeah, yeah. You see if that shows up on a weekly.
Nah,
it doesn't show up on a weekly.
It's almost all filled. It just came back and filled. Really touched it, I don't know, a month ago, and now it's back trying to hit it again on the daily.
The the more times, just like previous highs, previous lows, the more times you hit something like the previous highs, and finally you eat through it. And there's another thing right here, that 325 is resistance, but you're not backing away from that either. And this is the third time you're hitting it here, 1, 2, 3, and fourth time in that area now you're hitting that top of that gap. So, and you're not backing away. In my opinion, you'll probably eat through it. That's what I'm thinking is going to happen. Even though the first time up, you hit a gap, and it's on a lighter volume, it's going to resistance. If you hit it again, and volume's steady, the more times you hit high or low or a gap, the more chance you're going to break through it. So even though this appears to be a sideways consolidation in November, December, and we're into January, there's the market more or less moved sideways, up a little bit, but more or less moved sideways. So I think it's building a cause to break through that gap. And I think you'll get back to the next higher gap. Was it 395 is on the monthly chart?
Yeah, 396.
Yeah, 396. See, there's another gap up around that 400 area. Well, 420 looks like. We'll probably get to that gap. See how many times that gap back in February? You only tested that gap once. You couldn't even close it and fell through. I'm thinking this gap is going to eat through it, and we're going to try to hit that gap back at that 400 probably. So I think that 395, 400 is probably be a bigger consolidation, but there's really no, my opinion, topping pattern. The gap is resistance, but it's not backing away, so I'm thinking we're just going to eat through it. So at least on a short-term basis, it appears bullish. I think we'll get back to the monthly chart of that 396, 400 area.
Okay. If you've got time, I've got a question to take a look at the XLE. I don't know if you can pull it up real quickly.
Yeah, I can. Oh, I see. Yeah, we're up against a June high, kind of a rising triangle pattern on a daily. Let me flip to a monthly, see what it looks like. Well, it's kind of running out of steam on the monthly. You had a doji up there on the October, but you're not backing away with the sign of weakness or anything. Looks kind of garbage. You had some big, I'm looking at the monthly chart. Back in June of 2022, you had a kind of bearish engulfing pattern, and you came back up and tested that area, and you're still testing that area. There's a gap on the monthly chart right around the 72 area. You look at the monthly chart.
Yeah, I see it.
Yeah, I see the bearish engulfing pattern on the June of 2022. And a lot of times, bearish engulfing pattern highs are retested. And if you retest it in lighter volume, it's kind of a bearish sign. And we did that in October. Then you drew a doji there. Doji's at tops is not a good sign. Market count went down on lighter volume, broke below that doji low, but not very much volume, so it's kind of coming back. I think we're going to hit the gap at that 72 range. And we test a gap on lighter volume, then that'll be support. So maybe kind of a sideways pattern here, kind of a trading range where the 70 area is support and the 90 area is resistance. That's how I'd read it on a monthly, because normally on rallies, you want the volume to expand as it gradually goes higher, and this is not doing that.
Well, I want to thank you for being on.
So
this is Tim Ord of the ord-oracle.com. If you want any of the charts that we talked about today, I'll be glad to send them to you. Just email me at path@tfnn.com. Thanks again, Tim.
thanks for having me on.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years, with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as we get ready to wrap up another excellent broadcast, we're waiting to see what happens in the market here. Kind of fading a little bit off that 4,000. I would not have been surprised. I've been kind of looking for something that maybe just a consolidation around the 3,900 to 4,000 range. Right now we're at 3,984. I know that there's a huge amount of bullishness, especially from China's lockdown ending, and they're trying to transpose a lot of that and the way that we responded out of the end of the lockdown over a year ago to them now. But it didn't translate 100%. So we'll keep an eye on it here. But, you know, I'm kind of looking for us to maybe pull back, maybe, you know, somewhere around 3,900. And maybe that sets up some kind of rally back up to 4,000 next week. But I'm thinking we need at least some back and fill if that doesn't start today. And we've had quite the volume today, but it looks like it was mostly in those stocks that had high short interest. So maybe the shorts did give up today. We'll have to wait, or at least I'll have to wait and take a look at the data tonight. But I took the opportunity to, in the newsletter today, to sell one of my long positions, which was TSM in the trading newsletter. So that was pretty good. I'm down to one longer-term position in the Tech Insider. I like that into earnings later this month. But that's kind of it. Didn't get to Walt Disney today, but it's basically challenging the 70 million share high it had before with 14 million shares. Not much going on there. We'll talk more about that one tomorrow. Sell when you can, and I did today. Not when you have to, which I didn't do today. And we'll see you here tomorrow. Same bat channel, same bat time.
Building wealth trading in the stock market seems impossible to